Alrighty, guys. So the time has come. SOFI's earnings are out, and we have to break them down in this video. And let me tell you guys, this stock is moving all over the place. It went to $12 after the earnings came out, and now we're at about $11 per share. So jam-packed video. We have to break down the numbers and the charts, and of course, what I'm looking to do. But first, guys, hit the like button, make sure to subscribe, and get up to 15 stocks for a moo. Once you open up your account and fund it with at least $100, you get 5 stocks and a $30 cash reward. And fund your account with at least $1,000, you get 10 more stocks, and overall, your uninvested cash for now will earn up to 8.1% APY, which, guys, this is the best deal on the market right now. So check out the link down below or go to stocksurfest.com/moo. Get your money. And with that being said, guys, cheers. Let's get right into the video. So again, SOFI's numbers are out, and the stock initially shot up around 8%, touching $12 per share, and now we're at about $11 per share as we're about 6 minutes away from open. By the way, it's the pre-market right now when I'm making this video. I'm not sure when you're watching it, probably around 10 a.m. East Coast time, whatever it may be. But yeah, SOFI is slightly in the red after spiking like no other. So let me break down these numbers, guys. Let me actually wait. I want to see the estimate very quickly before we dive into the actual report here. Did they beat? I know they double beat. I'm pretty sure. But I have to double check here, guys. Let's come down. GAAP EPS, yup, of 5 cents versus 4 cents. On adjusted revenue of $690 million versus $630 million. So yeah, SOFI beat EPS, and they beat revenue by about $60 million. So keep that in mind. And now let's get into the actual earnings release, guys. Give me a second here. Let's do it. There we go. Beautiful. So we can see this is, by the way, on SOFI's investor relations page. We can see, if I zoom in a bit here, come on, there we go, beautiful. We can see at the top it says total net revenue, which I just gave you that number, $697 million. That is up 30% year over year. So guys, they crushed the revenue number right off the bat. They crushed the revenue number. They were projected, I think, 23% revenue growth, something like that, and we came in at 30%. That's very good news. Net income, they lost $266 million last year, and now they just made $60 million net income. So it was a loss last year, now $60 million. There we go. So revenue's growing 30% year over year. The loss turned into a gain. That's good news. And let me come down here a little bit more. Let's see here, guys. This shows you the members in thousands. For Q3 2024, we got 9.3 million members, which last year, same quarter, it was at 6.9 million. So that grew quite nicely year over year. Products, 13.6 million versus 10.4 million last year. That grew big time. We can see by segment here, lending products grew not as much as financial services products, but still both of those segments are growing as technology platform accounts have grown as well. 160 million in Q3 2024 versus 137 million last year in the same quarter. Now, I want to show you guys, financial services segment results. Financial services segment net revenue, get this, guys, increased 102% year over year to a record $238.3 million. That is crazy growth. Last year they did 118 million, so that is big time growth. Let me show you. I want to show you guys the different loan segments, if I can find it. I was looking at it before. Give me a second here. By the way, hit that like button, guys. Make sure to subscribe. We're almost at 50,000 subs here on YouTube. All right, here it is. Right here. Personal loans. All right. These are the origination volume, dollars and thousands during the period. All right, so in the 3 months ended September 30th, we can see personal loans origination volume $4.8 billion. You see that right here, $4.8 billion. And last year, they were 3.8. So that grew 26% year over year. Very good. Student loans didn't grow much. I'll be honest, 3%. From 919 million last year to now 940 million. But home loans are growing big time. 489 million as of the quarter they just reported versus 355 million last year. That's 38% growth year over year. And the total origination volume was 6.3 billion versus 5.1 billion last year. That grew 23% year over year. And I think, guys, listen, home loans, as rates are going to come down more now and we're getting more demand for mortgages, we're going to get more home loans. We're going to get more home loans from SOFI. So I think this is going to be, and there goes the opening bell, I think this is going to be the slept-on loan segment, if you will, home loans. I think they're going to grow quite nicely over time in the near term here, again, as rates are being cut. Now, I want to show you guys guidance. Let me do Control F very quickly and find out where the heck the guidance is. All right, here it is. Guidance and outlook. All right, we found it. We're almost done here, guys. We're almost done. This is these are crazy times. Very good earnings report from SOFI. Let's just say that. Very good. Let's clap it up, man. This is good. So, guidance for the full year 2024, management now expects to deliver adjusted net revenue of $2.53 to $2.55 billion, which is $85 million higher than the prior guidance range of $2.43 to $2.47 billion. So they raised it. Very good news. This implies 22 to 23% annual growth for revenue versus 17 and 19 or 219% previously. So that's very good. Management now expects to deliver adjusted EBITDA of $640 to $645 million, above prior guidance of $605 to $615 million. This represents a 25% adjusted EBITDA margin. All right. Let's see, anything else here worth mentioning? They now expect full-year GAAP net income of $204 to $206 million, above prior guidance of $175 to $185 million. So, guys, they're raising guidance across the board pretty much. They crushed earnings per share revenue in the last quarter, and they're growing nicely across the board. Total members, products, the loan origination volume is looking very strong right now, and that's probably why the stock initially shot to about $12. You guys saw that in the initial reaction. Now we're actually getting destroyed as the market just opened. We're down 9%, so keep that in mind. And I'm not surprised. I'm not surprised. I was expecting volatility here, and here we are. We're now down 8 to 9% at open. And we are down about, let's see here, guys, 15% off the highs. But the market's going to do, the stock's going to do what the stock's going to do in the short term. What really matters is the fact that earnings were good. They were strong. Guidance is there, guys. It's good. And yeah, that's what really matters at the end of the day. And we'll see what the stock does. It'll figure itself out. I do suspect we will hold $10. We'll see. I'll do another update later today because it's only 9:30. The market just opened, so we have to do another update as we get the price action for today, and man, this thing is slipping. Now it's down 11% at $9.95. Oh, now we're back to $10. So yeah, make sure to subscribe, guys. We're going to do another video. Hit the like button. And of course, don't forget to get up to 15 stocks from Moomoo. Open up your account, fund it with at least $100. You get 5 stocks and a $30 cash reward. And fund your account with at least $1,000. You get 10 more stocks. And overall, your uninvested cash for now will earn up to 8.1% APY, which, guys, that's the best deal by far right now. So check out the link down below or go to StockSurfFest.com/Moomoo. And with that being said, cheers. I'll catch you guys in the next video.